Is now the time to meet your maker? We're talking about the coin, not eternity. Maker in and of itself, a cryptocurrency, is interesting, but it's not that interesting in and of itself. What makes it interesting is that by extension, it has a tethered coin by the name of DAI, and that's what we're going to get into today, talking about what is it about Maker, a cryptocurrency that allows you, the investor, to in effect hold dollars or euros. A brief introduction on the history of money and monetary values in world history goes a little like this. Before there was paper money, there was gold and there was silver. And paper money was only issued when there was gold or silver later on backing it 1-to-1. So you could redeem that paper money for a piece of gold. In many ways, what Maker has done is to replicate the relationship between a cryptocurrency and money in the real world. How do they do it? They do it by you owning Marker, the cryptocurrency, allows you to govern those protocols such that DAI is the name, D-A-I, is the name of, in effect, the secondary currency in the Maker universe. And that has a peg, a $1 to $1 peg. And the relationship between Maker is that it ensures that your money is in effect as good as gold. What does that mean for the price of Maker? It means generally that when all cryptocurrencies go up, Maker goes up. Why is that? Let's take a look. You can see this is the price over the last month. When we had the spike in Bitcoin, we also had the spike in Maker. Bitcoin has stayed relatively stable, come down a little bit, but it also tracks the value of Maker and vice versa. Is that as it should be? Yes. How is new money created? Money is only created in the Maker world when you pledge assets, other cryptocurrencies, on a 1-to-1 basis. It's in effect very similar to in 100 years ago when you had to have an ounce of gold for an ounce of paper money. If you're thinking of trading in Marker, and again, Marker isn't the fixed currency, that's called the DAI. Marker, however, more or less trades in a band with, say, Bitcoin. Let's have a look. This shows you the relative value of Maker as opposed to Bitcoin. More or less, it trades in a relationship. You can see Bitcoin goes down, Maker goes down, it goes up. Sometimes there are moments when they're out of equilibrium, but in general, they trade in the same band. Maker, however, if all cryptocurrencies go down, then Maker will probably go down. Let's have a look on a very short-term basis at the price of Maker. Recently it's been about $1,300 US per coin. But you can see on a narrow basis how close it is, the relationship, in this case, between Bitcoin and Maker. But I don't want you to focus on that. What I want you to focus on in deciding whether this cryptocurrency might work for your portfolio is if you see a long-term future, as I do, that cryptocurrencies have a stabilizing value. In this case, the collateral that backs the DAI. In effect, that's why it's called a stable coin. That gives people the ability to hold a cryptocurrency and not feel that they, by holding their savings in DAI, are gambling on something they don't want to gamble in. It's fine if you want to invest in a cryptocurrency hoping it goes up. Maybe if you're short, hope it goes down. On the other hand, if you're using your savings to replicate those savings in a cryptocurrency, Maker, and its by extension the DAI, could be an interesting situation, certainly one worth studying. That's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascoin TV. Remember, money can take care of you. It cannot take care of itself.